your money masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You got half of the Money Masters. The other half will be in here as soon as possible. It is October 16th, and it's Terrific Tuesday. And on Terrific Tuesday, Tom buys houses. You know, he opened up the Tiger Real Estate Opportunity Fund. Folks, if you haven't had a chance to check it out, a couple of things. Go to the homepage of TFNN. You'll see a white paper. It says the bull market in Florida housing. Really doesn't necessarily have to be just Florida, but go take a look at that paper. Also, if you've got some interest, if you're trying to figure out what to do with your self-directed retirement funds, it doesn't have to just be IRAs. I just say that, you know, funds that are already put aside that you're trying to get to work for you, you might want to consider buying low and selling high in real estate, I believe, is the way to do that. So if you are a qualified investor, you can get additional information either by emailing Kathleen at tfnn.com, or what you can do is go over to the homepage of TFNN.com. Over on the right-hand side, you'll see a banner there for the Tiger Real Estate Opportunity Fund, and just proceed as follows. Now, FDR was famous for saying many things, but one of the things that he said, folks, was he said this: there are many ways of going forward, but only one way of standing still. These markets, they're moving forward. You got the Dow up 97 points, S&P up 10, Composite up 15, small caps up 6. Leading the charge on the way up here is the Dow, just by a nose, leading the S&P. I'm talking percentage-wise. You've got Apple down 60 pennies right now. Google off 91 cents. Cisco off up 13 pennies. Leading the charge on the way up here, dollar-wise this morning, you've got BlackRock Inc. They're up $5 and change. Fossil up $4 and change. Intuitive Surgical up $4 and change. Murphy Oil Company up $3.50. Domino's Pizza up $2.91. You've got EOG Resources up $2.75. Pioneer Natural Resources, PXD up 100 points, up a couple of points out there. To the downside, Grainger Worldwide leading things down 7% off $14 and change. Bankrate Inc. They are just getting demolished, down 25% this morning off $3 and change. PNC Financial off 4.5%. Diebold down $3 and change. Ulta Salon, the cosmetic and beauty retail operator, off about $2.50. Priceline off $2 and change. Our call-in number, as always, 877-927-6648. So if we take a look at intraday, what do we have going on? Intraday, what we've got is an A to B equals CD up. No bears in sight just yet. Hiding behind the corners. Looks to me like the ES Mini wants to get up into the 1447 level, perhaps 1449. That's where we'll make a 1 to 2, A to B equals CD. But we've got to wait for bearish candle signals. Otherwise, the market just simply wants to move higher out there. If we take a look at the daily chart, let's just simply go to the index of the S&P, and we can see what it's doing. What the daily, what it has done, folks, is, you know, the pullback that we've had thus far came right back into some horizontal resistance, came back into a trend line. That area held. It certainly held yesterday, getting some follow-through today. What the S&P wants to do is get up and tag the October 5th level. That level is 1456.89. It's at 1450, so it's not that much of a stretch in order to be able to get up there and test that area. There is a level of resistance. If I just simply take this chart back here, blow it up, and I'll just simply draw a line across the screen here, there most certainly is resistance. And as we take a look at that area, if I can draw a good line, there we go. So you can see right in here is where the S&P would run into resistance. In fact, it could form a version of a triple top out there. And so unless there is some volume out here, I suspect that that is what the S&P wants to do, and we'll take things one day at a time out there. But folks, first let's go to Canada. Let's go out to British Columbia to our man Rick, who's kind enough to call in. Rick, how you doing this morning?
Doing really good, Steve. How are you doing today?
Excellent. Thank you. Hey, we ever going to see any more hockey games?
You know what? I'm a hockey fan as good as anybody, but I don't even know what they're arguing about. I don't even want to know what they're arguing about.
Money.
You know what I mean?
Money. Like, they're arguing over money.
As you would say, that's lost energy.
Oh, it is. Oh, you know? Man, isn't it?
Yeah, it is. It's pretty sad, really. But,
yeah. I haven't followed it, to know if they're even close. I mean, last time I heard something was they were at such an impasse that they were just throwing their hands up.
Yeah, I don't know. Well, actually, they have Donald Fair, and I don't know, about 15 years ago, he was with the Players with Baseball, head guy.
Yes, okay.
And they went through a strike there. So when I seen him, I went, "Uh-oh." I'm not blaming the players because I really don't have a clue.
No, for sure. Yeah, I hear you. You want to take a look at Intel? Tell us what you're doing, and yeah.
Well, I'll tell you what. I bought Intel and I sold it. I'm sold it now.
Okay.
And then, but I think this thing stands a chance to get to $24. They come out with earnings after the bell.
Oh, they do. Okay. So Intel's after the bell today. Okay. Yes.
Yeah.
Well,
IBM, Intel, and CSX after the bell today.
Okay, thanks. Okay, so big earnings date for sure.
Yeah, but
now, so you bought Intel. What pattern were you looking at when you went ahead and bought Intel? Anything specific? Were you looking at a test of swing points or?
Well, it came down high on that 23, 24 area. It came down hard with big volume. That's kind of the real price of the stock.
Yes, okay.
And then it gapped down again about 5 days ago.
Right.
It actually kind of did a little ABC structure down.
Right.
Which kind of worried me a little bit. And then Texas Instruments come out, well, they're just selling a portion. Because a lot of times these things, they follow each other like geese, you know what I mean?
Yeah, absolutely.
So get the bounce today out of it.
Volume so far really not too bad today. I mean, with less than an hour of trading, it's done 20 million shares. Yesterday only did 50 million for the entire day. So,
well, the thing is, now I'm looking intraday, and I can see this thing pulling back almost to 2210, 2215 area. So if I wanted to buy it, probably going around 2217. So then I make sure I own it again, kind of thing. Right?
Yeah. But it's got that little spike out there. It's not so much a low, but it's pretty big high volume candle at 940. Now, when you're trading intraday, are you looking at 10-minute charts or 5 or 30?
I use them all.
You do? Okay, good.
Yeah. Well, for example, okay, just to get off the topic a minute.
Yeah.
Put the IWM on a minute. I just go versus yesterday.
Okay.
On a 15-minute, it doesn't have the volume, which to me says that gap's going to get filled.
Let me see here. Okay, so let me just. Which gap are you looking at? You're looking at the gap down.
Yesterday's gap up.
Gap up. Okay.
Sorry, today's gap up.
Got it. Okay. You're right. It really does. In fact, volume is dropping off, and all that the IWM is doing on the 15-minute is testing that 11 o'clock bar that looks like it has, 1 million shares? It's got 1.6 million shares and came up with 1.5 on that last 15 minutes.
Well, you know what? And on a 30, it doesn't either, but I think on the hourly it's going to have it. So I think we might be going to the places you just mentioned.
Yeah.
You see what I mean?
Well, look, the market was oversold. It hadn't achieved those levels of being oversold since the June lows. Mm-hmm. And as it was reaching those, not that it couldn't have gone lower, but the thing was, it was coming into those trend lines. And Rick, I don't know how this works. How is it that it works? We had a new moon come in yesterday at 8:40, 8:50, in the morning, and it just releases all that energy. It's amazing.
The new moon kind of hinted to Spain, hey, how about when you grab some money? I think. And the euro's taken off. So I think, we could correlate a lot of things together. Plus, it's option expiration coming in.
It is.
Quite often is bullish in advance of it, I find.
Yeah. Well, I think it's going to, if you take a look at options expiration, it kind of says that the S&P ought to settle about where it opened up this morning. Yeah. So we'll see how all that shakes out here.
And there's a little gap at 84 on. And we kind of technically broke down on lighter volume on a daily, so I don't know if we're going there on the IWM.
Yeah. My take, obviously, I'm bullish. Now, I'm still just in equities, haven't tinkered here with the indexes, but today's an important day for sure, volume-wise, because this thing could be either getting ready to set up a failure up at the highs. Or it could just be setting up a B to a C, and we're just going to have to play it one moment at a time out here. I mean, that's all that you really can do.
Well, that's right. I wouldn't Yeah. If you got other callers, I should probably get off of here. But otherwise, I was just curious if you should buy Intel in advance of earnings. It's a tough call, I know.
Well, the better call was when you held the equity yesterday. I will tell you right now, Intel is definitely on the short term on the 10-minute chart. Intel has achieved an area where it should begin to pull back. So you can, if Intel intraday pulls back into where you're looking at in the $21, $22, in change range, and it's pulling back on lighter volume, then then it becomes a good intraday setup. Because what's nice is you don't need to chase it. Nope, I know you don't chase things, so you wouldn't need to chase it here. But it has gotten, just on that intraday chart, it has achieved a overbought level, and so it should pull back.
Yeah, exactly.
And so so that would be my thinking. If it gives you enough time intraday, then I would go ahead and take the trade, because I do think these markets want to go test those, at least the most recent swing points out there.
Thanks a lot, Steve.
Okay, you bet. And thanks for calling. We always appreciate it. Let's go to Rich in Orlando. Rich, thanks for calling. Thanks for holding. How are you today?
Doing well, Steve. And yourself?
Excellent. Very, very good. Enjoying the October weather that we have here in Florida, huh?
Well, I know. I just came back from being up north, and I really enjoy the nice, crisp fall days up there. But this is a nice day. It's beautiful weather down here.
And what part of the north did you...
Chicago.
Okay, good.
Yeah.
How cold was it up there?
Well, actually, I think they had one day it spiked down. It spiked down, I think, into the 40s. But I mean, by and large, it was actually just nice, crisp. And of course, you had the fall colors. It's just a nice. Nice day.
Now, are you originally from Illinois, from the Chicago area?
Correct. Yeah, I was kind of born and raised in Chicago on the south side, and lived in Pennsylvania for about 30 years, and now we're down here.
Okay, all right. And so, you just like a mix of all of these places, or is one place you enjoy better than the other?
It's sort of which one of your kids do you like the best? I really enjoy. I like there's aspects of the north that I really love that I miss down here, but then on the other hand, there's aspects down here that I wouldn't necessarily trade to go back up north.
Now we're going to be going to break, so when we come to break, we'll take a look at your equity, which the ticker symbol is RES, RPC Inc. Now, when you go back there, is there a favorite restaurant that you go to that you just, you can't live without?
Oh, that's what I love Chicago for. I mean, it was just, you had all sorts. If you love food, Chicago is the place to be.
Oh, that's great. Folks, we'll be right back. 877-927-6648. Dow's up 104. S&P's up 10. We'll be right back with Rich. We'll be back in a moment.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. We got the Dow up 104 right now, S&P up 10, Composite up 17. Let's take a look in the metals market. What do we have going on out here? You've got gold trading out at 17.46. That's up $8 and change. Silver up 32 pennies. I'm sorry, up 23 pennies out at 32.97. And we're on the line with Rich in Orlando, who likes the restaurants in Chicago. Do you have a favorite?
Actually, the one that always sticks in my mind, like I said, I'm from the south side, a place in the city of Berwyn. There's a Mexican restaurant called Lalo's. Their food is good, but their margaritas are outstanding.
Oh, now we got it. Okay, it's not the food, it's the margaritas.
That's it. But there's so many good restaurants in Chicago. It's a wonderful place for food.
You know, Mexican restaurants are just simply fabulous. I mean, where else can you go and you get, nothing but great chips and salsa and maybe a nice adult beverage to go with it?
There you go.
That's a good thing. All right, so we're going to go take a look at RES, and tell me what it is that you're doing here and how I can help you.
Well, I'm in it, and I'm in it right around here. I think a couple last week, I bought it. It was around 11.89 or so at that time.
Okay.
I see it's bouncing off. Actually, what's kind of fascinating here is back in May I called and we talked about it. It was under 10.
Okay.
And of course, it's proceeded to go up to 14, and now it's back down again.
Yes.
It makes money. I like the fact that it's got some high volume at the highs. It's bouncing off the 200-day moving average. And I know you were talking about the new moon aspect, but I kind of suspect that we got a president out there with a Federal Reserve chairman that's got nothing but an open pocketbook. So I suspect that the market is probably going to have an upward tilt here as we go forward for the next couple of weeks.
Look, no question that there's liquidity that is certainly out there between all of the commercial banks around the world. Mm-hmm. There is. The market had gotten stretched, so it had reached levels, as I was mentioning to Rick, it had reached levels of being oversold that it hadn't seen since the last time, since the June lows out there in a number of the indexes. And so it was ready for a bounce. And then you had the fuse, which was the new moon out there. So we'll see what kind of volume is in it. This specific equity, you'd sure like to see it get. It broke a swing point here, which was back on August 30th that had 803,000 shares, and when it broke with 775,000. So volume hasn't been too bad on this equity, but what I'm not seeing is a whole lot of bullish candle signs. Right now, that's really the problem. I see that high.
Wasn't that one yesterday though? Wasn't it a hammer camel, or maybe not?
Nah, it really wasn't. It too much of a wick up on the top there. But certainly, look, the lower shadow there did tell you that the bulls were in charge during yesterday's trading session. And so there's no question about that. And you have a little bit of a gap here. But what I'm really taking a look at is it's got to do something with regard to dealing with that October 10th candle, which is 787,000 shares, and get above that 1195 level to start to look, bullish out there. Okay. So, but I see that I see what you're shooting for, and folks, what he's looking for, which is what you want to be looking for in any of the equities that you're looking to trade. You want to try to find some of these high volume highs out here. What Rich is looking at is the September 14th levels, got 1.8 million shares up there, and the beauty is that as this thing came down off of these levels, it didn't come down with any kind of volume out there. So, I don't think that you're in a bad trade. I just don't, just right now, I haven't seen a lot of bulls show up just yet to the workforce.
Yeah. Wouldn't you consider it, though, being in like a consolidation range there from that, $11 to $14 range and just at the low end of it, or not?
The real consolidation on this would be up at the high end, which would be in like the $13. And then I'd have to say the real low range would be right down here if you're watching on Tiger TV. I'll just simply draw the line across. And the reason is just simply, it's just a congestion area, much like when you're driving your car. I'm sure in Chicago, just like you have in Orlando. In Orlando, just to give you an idea, so in Orlando, I-4 is basically the main thoroughfare, folks. And I'm sure Rich has traveled this a number of times. But when you're coming up to the Fairbanks curve, do you expect traffic usually or things to slow down?
Sure.
For the and why? Who knows? But it's just simply an area where there's congestion, and you expect it. Well, in the case of this equity here, you see that congestion really around this black line that has put in here, and that's where I would use that as really the lows of the larger consolidation that this equity has been in. Just like if you just simply look for those congestion areas, this thing has got congestion up at the top as well. That is act as the resistance level. So this is really the box range that it is traveling in, and you happen to be in the middle of it. Mm-hmm. So, I don't say anything too bearish. I don't say anything too bullish either. Thanks for calling, Rich. I appreciate it. Yep. 877-927-6648. Dow is up 107 points. Granger's still leading things down to the downside. We'll go take a look at that stock chart and then Fossil when we come right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. The Dow up 118 right now. S&P's up 12. Composite up 12. Small caps up 6. And this coming Friday, I'm doing a online workshop that is called Candlesticks, the speed of trust out there. Now, the speed of trust, what that's really dealing at is nothing in life moves faster than the speed of trust. That's why you want to make sure that you are always surrounding yourselves with folks that you trust, because when you give somebody a task to do that you can trust, how much time do you have to spend worrying about what they're doing out there? You know, so each of us who have employed folks over life, or, you know, you just simply know those folks that you have. You know, and so when it comes to trading techniques, you want to make sure that you've got trading techniques that you can trust, because you have to be able to act just like that very quickly out there. Now, it's about candlesticks, which is the communication language of the bulls and the bears out there. But what I want you to understand is, look, there's plenty of reference material that you can find on the internet. This is not a course of, this is a bullish engulfing and this is what it looks like. I'm going to teach you how to trade with this, how to be able to add this to your platform of whatever tools it is that you use. And if you don't use any tools, you don't use any indicators, I'm going to show you a number of indicators that you can use in order to be able to enter and exit trades, and whether you trade options, currencies. So I've got examples of everything. So you trade options, currencies, equities, commodities. You want to make sure that you understand how to use these signs, what the bulls and bears are communicating to you. So this is not a course of, this is what this type of candle. There's going to be some of that basic stuff, but it's really how to harness the strength of what the bulls and bears are communicating to you. So let's go take a look. I'll share one thing with you here. Let's go take a look at the formation over the last 4 days of the, and I'm just taking a look at the Dow futures. So I'm going to go from the Dow futures to the S&P 500. So I'm certainly going to teach you something. Of course, my aim is always to teach you something each and every day out here. So let's take a look at what we had going on as the market was moving down into the rising trend line. So that rising trend line is the off of the June 4th low. Now, what I did was I got rid of the horizontal resistance that was really right here. So it was coming right into an apex yesterday. But let's just take a look at the candle formation. So you have the Dow futures on October 10th moving down with conviction. There's no question here. If I asked you who was in charge of this trading session, clearly the bears were in charge from the open to the close out here for the most part. And as we take a look at the following trading session, we had one of those doji candles out there. Now, a doji, folks, taking place at a support area. A lot more meaning than just in the middle of a move out here. You then had just simply a little bit of like an inverted hammer form on the next trading session on October 12th. And then yesterday, I can't tell you whether it was because of coming into a support area here, because, you can draw these lines. Others draw these lines out here. They were a line where your back was up against the wall out there. But yesterday's candle here, this is a version of a three-river morning star, only in this case here it's really a four-river morning star. I just have to rename that. And when you take a look, this is a very powerful candle formation. I'd love to be able to teach you how to use this, but I'm going to show you where this candle formation occurred before, and it's occurred elsewhere. In fact, if you come back and you take a look at this June 4th low out here, this candle formation of these 4 days looks very similar to these 4 days. Maybe not in measurement with regard to the length of the bar on the downdraft on the June 1st area and the updraft on June 6th, but close enough to these two trading sessions, because yesterday, who was in charge, the bulls or the bears? The bulls closed almost at its session highs out here. Now that, I'm going to go ahead and I'm going to go back to the S&P 500 out here. And as I do that, I've got to swing all the way back. So just give me a second here. And we're going to go back and take a look at the March 09 lows, because you're going to, Neil, if what you do is if you've got a charting package, go back and you take a look at this candle formation on the Dow and the S&P, because there's other times where it's out here, other instances. But if we come back and we take a look at the March 09 area, who's in charge in the session here of March 5th? The bears, for sure. That was where I went 100% long. I had been short this market. I started going short in October of 2007. Felt a little bit of heat, but shorted it. This day here, March 5th, I went 100% long in the marketplace. Of course, nobody thought that the market was going to stop. Now, I liked the candle that formed here on March the 6th. Got a little hairy intraday there, but you had a nice little doji out there, right? Isn't that what we just took a look at off of the most recent downdraft here that we've had? And then take a look at this candle. Almost an inverted hammer, just like what we looked at on the Dow futures contract just a few moments ago. And then you take a look at the session when the market took off, never looked back, March 10th. Take a look at that four-candle configuration out there. Very similar to what, eerily similar to what it is that we just had over the last 4 days. Now, you had other patterns out here that completed, right? Just take a look at A, B, C, D patterns here off of the most recent set of swing points. Of course, most recent if we were back in January of 2009. So January 6, 2009, the high down to the low. Let's take a look at the formation that it makes. Makes a little bit over a 1 to 1.272, close to 1 to 1.618. A to B equals CD down. What other pattern did it make? It made an expansion. It made a butterfly pattern on the way down. I can draw that in here. Just a little bit over 1.272, but I'll draw in the 1.272 range out here. That would finish right there. Okay, so it made it just a little bit below that level. Hey, how about that? You got this nice little Fibonacci number here of 2.618, expansion numbers out there. So it had all kinds of patterns. However, the bulls and the bears who are making signs, folks, you really want to make sure that you are paying attention to that and that you know how to use that for trading. You want to make sure, because it works on intraday, it works on everything else. So take a look at this pattern here right now. If not, come back to Tiger TV on Channel 10 where this thing here is taped. Take a look at that. Now let's go to the Dow futures and take a look at this. Does that look similar to you? The answer has to be an absolute resounding yes out there. Something to think about. That's at least why I believe that the markets are going to go test the highs out here. In the case of the Dow, it's going to go back to the 13,599. If it breaks through these areas, because you're going to find some resistance up there, it's already been tested. One of two things are going to happen. We're either going to have a triple test and a failure on price and volume, and then we know it's going to be coming back into the trend line, and the question you've got to be paying attention to, or what you have to be paying attention to, is this area here, because if this area breaks, it's sending off a pretty significant signal to you. Let's see, are there any other patterns like that here in the Dow futures? I know there are. I just can't always remember them off the top of my head out here. But I showed you the most important ones to be paying attention to. So in the case of the, let's go back here to the Dow futures. I digress, and of course, let me get back there now. So now, because of that candle pattern, okay, and none of us can control the markets. All we can control, folks, is the action that we take and a trading plan and stops and exits and so forth. And that's all that you can control. So don't get upset if the market doesn't go your way. Just make sure that you've got the right stop and exit strategy in place. Make sure you got a strategy. Make sure it's written down on a piece of paper, because when it comes to emotion time, when you get to having to make that decision, all of a sudden that little fear might run through you, and there's nothing worse than making a decision when you've got fear. You don't want fear in your veins. Make it while you're a little bit agnostic to the situation. So if this area gets taken out, you're going to see the Dow, you're going to see the markets move up to their next level. So it's just as important as it was yesterday's trading session, as it was coming down into the precipice, that we take a look and see what happens inside our markets as this area here of resistance gets tested, and that is in the Dow futures. So I hope that helps you out there. Go to the homepage at tfnn.com. You'll see over on the left-hand side candlesticks for the workshop that I've got, or click on my name. That might take you as well. Make sure you certainly at least download the paper, because I show you just as I showed you something here, I show you something inside that paper that you absolutely want to make sure that you are paying attention to, and that is on the underneath breaking news on the homepage of tfnn.com. Let's continue taking a look around these markets. We haven't gone overseas yet, so let's go see what DAXI is doing. Trading up right now. That's $1. I don't want that. The DAX is trading up 114 points. Well, first we'll just take a look at the Shanghai. The Shanghai here not really doing anything last night, coming into its area of resistance, which is the last time that they had a pretty big infusion of currency into the Chinese market, which was September 7th out there. I suspect that these highs are going to be tackled again. But let's go take a look at the DAX Oktoberfest. I've never been to an Oktoberfest. I got to put that on my bucket list out there, because I don't know about you, but I enjoy a good beer. Let's see. The DAX looks like I got rid of it somehow, so I got to put that ticker symbol here up on my screen. It'll take just a moment as I do that. Got fat fingers here. See if I did that right. No, I didn't. Apparently, I need to. I'm going to try that one more time. I apologize here. It's just the symbols I have to put in here for the DAX is just a little bit more than normal. There we go. So now we're taking a look at the DAX out here. And let's see here. I can pull that up. Okay. So now we're taking a look at the DAX. The DAX also trying to make it to its highs. Now, we know the DAX has volume up in that September 21st level. The low of that is 73.91. Let's see, what has the DAX gotten to today? 73.87. So just a few dollars below that. Trade at 73.74. DAX open for another 45 minutes. The DAX closes, gets up there, closes inside that. That'll be leaving a fairly big clue as to what our markets are going to do as well. So 73.91.06. That's the number you want to write down on a sheet of paper. And then at 11:30 this morning, check back and see where the DAX had closed out its session. It doesn't have to close in there. I'm just suggesting that if it does close in there, it'll leave a fairly large clue with regard to our markets and what they want to do out there. Let's go take a look at, I haven't looked at any of the ETF sectors for the SPYs, for the S&P 500. So why don't we go ahead and do that? The first one that we've got here is the energy sector, the XLE. Now, one of the tools you want to make sure you have in your bag is understanding retracement levels between swing points. Swing points being nothing more than major intersections where you see price change direction. And if we take a look at the XLE here, and I'll go ahead and blow this up on my screen, you've got a intersection here from September the 26th. XLE makes a low of 72.54. moves just a bit higher over the course of 4 trading days into the October 1st level, gets up to 74.53. So from the high swing point, which happened to be September 14th, down to the low intersection on September 26th, what the XLE did was a 0.382 retracement. Not a very large retracement out there. A normal retracement, though, for where you would see people get off of the elevator and then the market would pull back. Well, in this case here, it did pull back, and it made just a little bit over 1.272 expansion of swing points. That happens to be the September 26th low, and the low that was put in yesterday, that low being $71.91. You'll see 1.32. Remember, 1.272, it's the guideline. You can give it just a little bit of room, so you had a 1.272 expansion. You also had a 0.786 retracement off of a swing point low from September the 4th. All the way to the high that was put in on the 14th. You had a 0.618 retracement off of a swing point low from August the 2nd out there. You also had a 0.382 retracement off of the swing point from June 25th that was out there. So you've got all kinds of Fibonacci expansion and contraction numbers coming together at the same time. When you see that, you want to take advantage of that, or you want to make sure that you understand what your expectation is there, because in this case here, this was saying that it was going to act as a strong support area. Why? Just why those numbers work? I don't know. I just know that they do. It just simply because in life it just works that way. Now what you've had is you've had the XLE gap up. Let's take a look at the volume. Again, only been trading here for an hour and 15 minutes. Thus far, 3.8 million shares going into the swing point that has 10 million shares. So it should have the volume today. Trading inside there. Also another swing point would be October 1st, which has 11 million shares. So 11 and 10, we'll see how this does. The XLE, if it closes inside there, then the XLE is going to want to do, I would presume, a larger retracement. That larger retracement here is going to take you to the 75.27 level. You can say why. So far what it's done today is nothing but a 0.382, but it gapped up into it. Gapped up into it. And just now, what you need to do is be benchmarking volume, and I would benchmark it against the lighter volume level, which is October 9th, which has 10.2 million shares inside there. You close inside there, it'll want to go up to that sweet 618 level. Let's go take a look at the XLF. Victor Pandit stepping down or being tossed down, certainly resigning out there. So, we'll find out. I'm sure the news will come out as to what the reasons are, or why. Of course, I don't know if we'll be able to really believe the reasons that they first give to us. But if we do take a look at the XLF, and don't feel too bad for Victor, I'm sure he is just fine on the outside. Probably not doing as well on the inside this morning. If we do take a look at the XLF, gapping up this morning, has done 35 million shares. Now, yesterday did 55 million shares. That 55 was trying to get into the swing point from October 5th that had 61 million shares. So really not too bad. You're inside there today, 35 million shares. It's got the juice. It's got the volume. And what does that set up? That sets up, it wants to go all the way back up to September 14th. That low on the XLE, 1623, 122 million shares out there. Today's a day when it could have that kind of volume out here. The XLF. That thing gets some juice in it, folks. This market is going to move higher. 877-927-6648. Dow is up 113. S&P is up 11. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Thomas Edison didn't invent the light bulb, he made it better. As the fourth most prolific inventor, Edison found that most people failed because they failed to realize how close they were to success before they gave up. Success requires a few disciplines, practice each day. When it comes to trading and investing, one of those disciplines is understanding and acknowledging the language of the markets. For centuries, Japanese candlestick charting has unlocked the hidden treasures of the language of the bulls and the bears, the buyers and the sellers. Candlestick charting is a tool, not a trading system. Candlesticks tell you when to enter, when to exit, and identify the risk and reward for every trade. Candlesticks identify market turns before they happen. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, and on Friday, October 19th, I'll be conducting an online, one-day course teaching you the secrets of Japanese candlestick charting. Go to the homepage at TFNN.com and sign up today, because candlesticks will make you a better trader.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. You got the Dow up 104, S&P's up 9, and just taking a look at the 30-minute chart on the ES Mini, and seeing the first signs here that the bears are checking in for work. Must have had a rough night last night, and so they just delayed, and they've been checking in right around 11 o'clock each day out here. We'll see how this closes. If on the ES Mini you get a close below 1445, it's traded 1445 right now. That'll set up a bearish engulfing candle, but the key is understanding how to deal with the next candle that forms after that. You've got the ES Mini in an area here where it is bought, and so I would expect it to pull back. Just going to have to wait for the bears to give us a signal, but that would be the first one out there. And then if you're trading intraday, you're just going to be paying attention. Now, and you've also got the ES Mini here. If we take a look at it, it has completed nearly it's just over the 1 to 1.618, A to B equals CD. That price projection was 1444. The 1 to 2 level, 1449.51. The bears don't show up for work here. The ES Mini will head up to the 1449 level next. That would be a 1 to 2, A to B equals CD, and I expect that we would see them show up for work then. As we take a look around some of the equities here, see how things are trading. We'll take a look at Apple and Google, perhaps to round out the show here. So as we do that, Apple is trading up $3 and change. So it's Google first, actually, that I want to find. Not that I can just type it. Here we go. Okay, so we got Google on the 30-minute chart. So let's take a look at Google. I want to take a look at it on the daily chart and see what it has done here, because yesterday it was tackling a swing point. Just clear the decks here. The swing point that it was tackling was right out here. It's the October 10th level, and that low is 738.29. Now, the reason why that was so important is if you take a look at Google off of the lows from July 12th when it was in the $560 area, again trading at 741 right now, you can see it never broke a swing point at all on the way down. This was going to be and was the first time that it was trying to break that swing point. Now, that low from October 10th, 738.29. It closed out yesterday at 740. So it did not break the swing point. It had volume, because the volume on October 10th was 2 million shares. Yesterday was 3 million shares. So it had more volume, but it couldn't bust it down. It's important, though, that Google doesn't close below that level, because you've got volume down there. Today, so far, it looks like it has tested the low of October 10th again, 738.29. It has gotten down to 736.46. It's at 741. Volume today much more tepid, only 681,000 shares. No, I shouldn't say that. It's got the volume in it this morning as well as yesterday. So be watching Google. And what I would now, when you take a look at what was coming down into, if you just simply come over to the left, so even though yesterday was coming down on volume, tackling its first swing point on the way down, it was going against volume. So you had 3 million shares yesterday going against the candle from September 24th that had 3.5 million shares, as well as it had volume on September 25th as well, had 6 million shares there. So watch Google. Now let's go take a look at Apple. Just to round things out here quickly, AAPL is the ticker symbol. Apple trading up $4 and change. Apple having come down and tested its rising trend line out here, got down there really yesterday, very close to testing that. And so we'll be watching Apple. Apple, just like the markets, testing the rising trend line. Stay tuned, folks. Basil Chapman will be up next. Then from 1 to 2, we've got Darryl Martin. David White is off for the day, I believe. Ken Shreve from 3 to 4. Tom O'Brien Show from 4 to 6. Thanks so much for being here, folks. Have a terrific Tuesday. I look forward to seeing you in the morning.